in this particular situation, the first year option ended up saving them almost $900 a month. It's like $892 a month for the first year.
Hello, everybody. This is Matt Thomas. I'm here with Brian Dewald. Brian, do you want to introduce yourself and tell us what you do?
You bet, sir. Thanks so much for the having me on with you. It's always fun and exciting to go through some of these news minutes and stuff. So I'm Brian Dewald. I'm at Fairway Independent Mortgage Corporation. And Matt and I've worked together a long time, and I'm a 20-year veteran in the industry this year. So I'm excited about that.
Yeah, very good. And Brian, obviously you and I are here. We're if you've been watching, this is what we call our Mortgage Minute. We usually spend several minutes talking about the latest and greatest information, what's going on in the mortgage world, how that affects you as a home buyer or even somebody who might want to refinance. But in this case, there's a lot going on, certainly in the news with regard to mortgage rates. And Brian, why don't you key us in on a couple of your hot topics right now?
Yeah, so I'll jump into some market information in terms of mortgage prices and mortgage bonds here momentarily. But we also saw some kind of breaking news yesterday. Really good news. It seems like the government and the agencies, and when I use that phrase agencies, I'm referring to Fannie Mae and Freddie Mac. They've made some changes recently, particularly to first-time home buyers. That we're going to benefit some of those folks, looking in the conventional realm. And as such, the government came out yesterday and had made some adjustments and improvements to the way they're doing things. So for FHA buyers, they are reducing the amount of mortgage insurance by quite a bit, 30 basis points per year, which is a lot. And then also rewarding some veterans. Certainly not everybody in the VA world, but if you're putting down 5% or more, veterans are going to get a nice break too. So great news across the board yesterday in terms of, buying for not just first timers, but just in general, whether you're an FHA or a VA buyer.
Yeah, that is great news. There's a lot of debate as to how maybe the government can step in and help first time home buyers. We all have heard how expensive things are, or how, maybe even inflated, just difficult for first time home buyers to get in the market. And certainly when we compare now to, 5-10 years ago, what it costs for a home buyer to get into that kind of first starter home it has changed quite a bit. So this is definitely good news if you're looking to buy your first home, and it's going to help out quite a bit. So that is great.
It should be the case across the board too, right? So whether you're, conventional or a veteran or FHA or, any of those, they're sort of competing with each other, which is, we all know that's good news when they're competing for business. So
in a free market, you want all that competition. So that's great.
Yes, sir. Yeah, good stuff.
Very good. And Brian, now you as we were preparing for this, you also mentioned that there were some things going on. I think you wanted to mention regarding the Fed and the job numbers that we've heard in the recent reports.
Yeah, we're trying to get a pulse as to why there's just so much movement in the mortgage industry, right? As far as prices and mortgage bonds and these kind of things. We saw a big spike, kind of in summer last year, and then it slowly but surely started inching down, and kind of in the in the fourth quarter, we start to see some improvements, and all of a sudden, first part of the year, we start inching right back up to where we were in the highs. And I'm trying to research and scratch my head and figure out what the heck is going on here, because we keep hearing inflation is improving, and I think we've talked about it enough that most of the folks watching here would know that inflation and mortgage bonds go hand in hand, right? When inflation's up, mortgage bonds are up, so mortgage rates are up. What's been interesting lately is that they've retracted some of the data, and I'm sort of just trying to challenge my own brain here to kind of figure out why. But for instance, a couple of weeks ago, the CPI report came out and said, here's our number, and then they pulled back and said, well, it's still better than it was, but it's not as good as we reported initially. Just this week, the market was closed on Monday for President's Day, and then Tuesday opened up, and it was just kind of an odd day, right? I get a text alert, every couple hours as far as here's what the market's doing. And about 7:00 Mountain Time, I get a new one, and it just says, here's what the market is opening up at. And I looked at it, I'm like, how in the heck is this possible? It was just sort of a slaughterhouse, and it's improved and it's been fine since. But, I was trying to figure out what the details were. So we start looking at unemployment. That was the news that seemed to make this spike in mortgage prices kind of go up a little bit. So, a lot of that inflationary numbers, and what the Fed talks about, has to do with employment numbers and this gigantic gain supposedly in January, they were reporting, I believe, 517,000 new jobs is what BLS reported, which is, I believe, the Bureau of Labor Services or something along those lines. And it's what the government gauges and uses to, kind of control Fed rates. And they're using that for inflation. There's a gentleman out of St. Louis, there's a Fed chairman, his name's Bullard, comes out and, makes these claims as far as unemployment or employment. And it seems to us that it's being brilliantly disguised, as I read. So looking at what ADP came out with, right? They're the largest payroll provider in the world, as far as I know. They manage 25 million payrolls every month. And they're saying that job creation last month was closer to about 106,000. So there's a big, obviously, discrepancy between, where ADP is thinking and where the Fed is thinking and the government is thinking jobs are. Additionally, there was a report here recently from the CEO of ZipRecruiter, and he's quoting here. It says, moderating hiring plans and reducing recruiting budgets. So this is all just news from January from ZipRecruiter. So I don't know. I don't know if there's the Fed is either blatantly just getting it wrong or I'm scratching my head as to why. So anyway,
there's some fudging of the numbers, it sounds like. And, there's probably a lot of reasons why that's happening and various people that might benefit. Obviously, I think, we all want to hear good news. That seems like good news, but it's also keeping, it's going to keep inflation, like beating down inflation at bay for sure. So it's not helpful from that standpoint. And they keep threatening that we're going to be in a recession and maybe we're in one and those things. Obviously, housing has seen its recession because of the increase in rates, last year especially. So, and housing is typically a precursor to, what happens with the rest of the economy. However, it doesn't seem like it's hit yet. So it's interesting to hear that, that there's a lot of people questioning the numbers, and it does lead to, unfortunately, some volatility. What's great, though, is, you and I had a mutual client this week go under contract on a property that they were able to get not only under list price, but help the seller was able to contribute to the buyer's closing costs, and the closing costs are going to go towards a rate buy down. So we've talked about buy downs quite a bit if you're following this week to week. But if you haven't tuned in a while or you're just new to us, you might want to know, I think, what a rate buy down is. And Brian, these clients got a 2-1 buy down. You want to tell us real quickly what that is and maybe call it for a week?
Absolutely. Yeah. These guys opted for a 2-1 buy down. I 100% agree with their decision. And collectively, we decided this is going to be the best option to use the funds from the seller. So, we ended up for the first year, they ended up at a 2% rate discount, if you will. And in year two, looking for a 1% discount, and that'll be there. In this particular situation, the first year option ended up saving them almost $900 a month. It's like $892 a month for the first year, right? And if everything goes as planned and as everybody's sort of forecasting, they should be able to refinance that loan sometime here in the next year and end up permanently where their current one is, hopefully even a little bit better, which would be kind of cool.
Sure.
The other thing that not a lot of people know about, so basically the way it works is there's a subsidy, right? If the current rate is whatever it is, there's a cost to get down 2% lower and then another 1% lower. We call that the subsidy. So all these funds go into an escrow account of sorts. And what's cool, like if these guys refinance in the first, 8 months, whatever the balance of that subsidy is, goes back to them to reduce their loan amount a little bit. So it's super cool. This worked out to be such a sweetheart deal for them. And like I said, a $900 savings in payment is just a massive drop. So I'm super thrilled it worked out for them the way it did.
Yeah, no, that's tremendous. So basically how that works is that the seller is crediting the buyer, and that credit then becomes that subsidy that you're talking about. So that is offsetting what the buyer has to contribute to their mortgage over that period of time. Is that right?
Accurate.
And then that money, again, like you just described, if you refinance before the end of that 2-year cycle that they're buying into, that money then is not lost, but it actually goes towards the buyer's principal.
Yeah, it's super sweet. Yeah,
that's tremendous. Yeah. So what we negotiate at the at the closing table or before the closing table when we're putting together offers and getting this contribution from the sellers does not go lost. It goes right towards helping the buyer in every way, shape, or form. So that's pretty great. And that's a great way for people who are getting a little bit of sticker shock to go, hey, how else can we skin the cat, so to speak. And there are many ways to do that. So that's great.
Yep.
It's the real time and, example of, how we're helping clients and being able to navigate this mortgage market where, things tend to be up and down. And we'd love to see that trend as they were at the beginning of the year continue to go down. But if they don't, and they kind of go up and down as we, move throughout the year, there are ways to navigate that situation. So anyway, great stuff, Brian. We appreciate you sharing that. Hopefully to those watching, this has been informational. We, as always, would like to invite you to continue to watch. Make sure you subscribe to the channel and pay attention every week so that we can give you the latest and greatest. Not only that, but Brian and I are obviously here to help you out. So as I mentioned before, I'm a local real estate agent and would love to be the one that helps you navigate the home buying process along with Brian, who again handles the mortgage side. So anyway, until next time, Brian, I appreciate the information you shared, and we'll chat next week.
Thanks for having me as always.
All right, man. We'll see ya.
See ya.